Well, let's bring in our guest, Shaun Richards in the UK. He's an economist, been on the show before. Shaun, Happy New Year to you. Thank you so much for joining us. I wanted to get your thoughts on Colombia's capitulation to President Trump's demands over the weekend.
Well, thank you, and Happy New Year to all of you as well. Actually, this kind of hits home because I have various friends here who are Colombians. And of course, from the Colombian point of view, it's like trying to deal with an elephant, isn't it? And I don't just mean Donald Trump here, I mean the United States, because there's been a change here. If you look at this in terms of economics, and if you go into the textbooks, I always used to assume that those with a trade surplus were in the strongest hand. But in the more modern era, that switched to those in the deficit. And the Donald Trump 2.0, however you want to put that, has rather grasped that nettle and realised that the US is in a strong position when it imposes this because it takes so many goods and services from around the world. So that's put pressure on it. And that's been kind of a change. And, you know, poor little Colombia having to face not only the US economy, but the forces here was under enormous pressure. And there's another factor in this. Whilst the US is a very big trading nation, for itself, relatively, it's a small amount of their economy. So it can do this to some extent. There are obviously issues about imposing tariffs, you raise your own inflation rate. But I think we can see something out of this as to how quickly Colombia capitulated, frankly. They knew that they were on a loser.
Now, I do want to get to the UK, where you are. Jonathan Reynolds, UK Business Secretary, said that, well, there's not really much of a goods trade deficit that the US has with the UK, so there should be an argument for no tariffs on the UK. Let me take a look at a quote from Jonathan Reynolds, where he did say that essentially, well, that's pretty much what he said. So I did want to get your thoughts on that. Okay, so we do have the quote here. So basically he says, you know, we know this is something that it's not just President Trump, but the whole of his administration takes very seriously. We've obviously got a services-based economy, is referring to the UK, and you know, Shaun, you have mentioned that before. It says the US does not have that deficit with us. So if that's the logic of that position, I think we've got an argument. Well, what do you make of Jonathan Reynolds' position here?
Well, there's a bit of a swerve in his thing because he, in other quotes, switches to talking about a goods deficit and so on. And actually, in your quote, he's then back to what I was about to say, which the UK strength is in services. So the goods situation is being a little disingenuous in a way when he said that elsewhere. And I think that a lot of the situation here is going to depend on politics rather than economics. There are all sorts of issues of the UK and the US. You know, we like to think there's a special relationship. Can we in some way dodge the tariff bullet? And so there's a lot of factors in play there. I think quite a few of them don't have anything to do with economics at all, really, except one thing here is, if we return to the Colombian situation, there's not a migrant issue between the UK and US. So I would expect Donald Trump to be more interested in other countries on that first. So it might be a little while before he gets round to the UK, and then we'll find out. But in terms of the trade thing, no, I don't think we'll be anywhere near the top of the list. But you know what it's like, some of this with President Trump's emotion. So we'll have to wait and see.
Still in the UK, Shaun, Rachel Reeves, who was in Davos last week, we understand she wants to fast track housing approvals near rail stations, part of the 1.5 million housing plan over the next 5 years. They want to cut red tape. What do you make of this development here, and how quickly they're trying to get development through and reduce the hurdles to said development?
Well, there are various strands to this. The first is that in the UK, there's all sorts of red tape around development. It's been a very big issue. Now, this is not just in housing. It's in something like, say, for example, something that's a weakness of ours, which is electricity production. We've started to build some new nuclear reactors, but it takes years before they get through the inquiry. And what this leads is that some of these inquiries for certain things run into the tens of millions over something minor. So it is a big issue in the UK. And I think for some things it would be good news if we can get on with it. If we move specifically now to housing, there's a problem because, see, previous governments have aimed at these sort of levels of building. And the issue is, do we have the people to build it? I'm afraid we have a political class that love to announce things, but can we do it? And what do I mean by that is we need surveyors, bricklayers, and so on to actually build these places, plasterers, and so on. And do we actually have the people to do it? That's the more awkward side. This was my father's business. He was a surveyor. And he always used to say that we needed more places. He trained at the Brixton School of Building back in the day, that we needed more than that. And that the shift towards university education has meant that trades, there's been less of that. So that's the real issue in the UK. Do we have the people to build them?
Right. I do want to get to the US and Europe. We've got some central bank decisions this week. Wednesday, the Federal Reserve. Let me start with them. It's expected, at least in some fields, that we're going to get a hold or a pause on rate movement, I guess because of what's going on geopolitically. What do you think? What's your outlook? What do you think the Fed could decide on Wednesday?
Well, in some ways, I think President Trump's decided it for them, but not in the way that he wants. What I mean by that is, I think they were thinking of pausing anyway, like you just said. Now that he's put so much pressure on them to cut, they can't cut because then they'll look weak, won't they? So in a way, for this week, he's reinforced, I think, the pause argument. But looking further ahead, he probably has made cuts more likely. And moving on to a different sphere here, and again, looking ahead, if he can manage, as he said at Davos last week, to get oil prices lower, then that might lead to further interest rate cuts. But for this week, a pause always seems likely. And I think it would really set things out if they did now cut. So we'd see them pretty quickly dropping a hint to that, because I don't think they'd want to do a shock. So pause for that.
What about the ECB? Some say we could expect a 25 basis point cut from the European Central Bank on Thursday, which is the day after the Fed. How do you think Europe could move in that? In which direction you think?
Well, this year, I think interest rates there are certainly going lower. It would require a big move to stop that. And I think the likelihood, again, is another 25 basis point cut. I mean, if you look at the situation for the ECB, it's quite different. If we return back to the United States, see, that's had quite good growth. Although the Donald's applying pressure, there's no particular urgency for interest rate cuts. In fact, you could make some arguments that maybe they should put them back up again. But Europe, the economic situation is very different, with people expecting the interest rate to fall to 2%, 1.5% maybe. So really, it's a question of when rather than if. And a pause would be more of a surprise there. They're much more likely to cut.
We want to round off with technology. China has launched a large language model called Deepseek, and I guess the idea is that it's much cheaper to make and is undercutting the high valuations of some of the U.S. AI players, like ChatGPT, OpenAI, and the likes. What do you make of how China's advancements in AI here with this new Deepseek launch?
Well, I think we're almost back to the tariffs again, aren't we? In the sense that there's an economic war between China and the US now, and each side will be trying to play around and undercut the other. You could look at it and say my economic sphere in terms of, say, the exchange rate. Might China have a go at trying to depreciate that, get it lower? And I see the AI DeepSeek thing as being like that. And also it comes into a background, doesn't it? Because for the United States, this is an area that's been extraordinarily strong. We keep seeing the stock market, S&P 500, go up, measures of tech stocks going through the roof. I heard you earlier mention the Magnificent Seven, but that's also a narrowing of the US stock market, isn't it? So much of this is in so few shares. And I think the Chinese have spotted that and basically got their elbows out and given the US a bit of a nudge.
Shaun Richards, economist over in the UK. We appreciate you talking to us on Arise News. Thank you so much for your time.